Welcome to Second Take, the show that focuses on the issues behind the news. There seems to be a lack of confidence in world order and the ability of governments to manipulate the value of flat currency, as is confidence in governments as a credible source of capital. Martin Creamer joins me in studio to discuss this trend. Hi Martin.
Hi Tracy.
So the obvious thing to do during these times is to invest in physical gold, but DRD Gold CEO Neil Pretorius foresees a problem.
Yes, it's I think gold, there's just too much secrecy around it. The central banks claim they've got certain amounts, but there are many reports that when you go and check the vault, there's nothing there. So what they're doing is they're making that gold work for the country. So they're giving it out with IOUs. So in other words, there will be pledges that that gold will come back. So bullion banks will take the gold, put it out into the market. This gives a revenue stream to the central bank or the country, and it sits there with paper in the expectation that there's so much gold being produced, that gold will come back. But that gold is already out of the consumer market. It's hanging from the ears of Indian women, and it's in jewelry in China, so it's not going to come back in. Now, all of a sudden, there is this demand for gold, this demand for physical gold. And we see with Brexit, the coins, the gold investment bars, they were just flying out of there because people lose confidence in governments. And they lose confidence in governments that can just go and print money. When they print money, the value drops, so they want to keep that hold on the value, and they grab onto gold in these troubled times. But will the gold be there? Will the gold be there in the sort of medium to longer term? Can these central banks that have been giving the gold out to bullion banks, which in turn have been putting this into the market, taking it out of the ambit of quick return, will they be able to return it quickly? What will be the consequences? So if there's a shortage of physical gold, suddenly there's a demand pull for gold from the mining industry because they're the primary producers. What is the gold mining industry generally in the world been doing? They've been pulling in their horns because the price has been down. So they have been stopping their capital investment, which is so important for mining, because you've got to prepare for the future all the time. So you've got to prepare the areas where you're going to mine. If you slow down on that, you slow down the process of coming back if demand pulls up. At the same time, you have refineries that are not overly keen to recycle gold. There's a lot of problems with it. You see lawsuits every now and then, and complaints. And so the suggestion now is that because of this strange way of so-called keeping gold in banks and vaults, which is not happening, if they have to pay back, or they have to return that gold to the central banks, will they be able to do it? The feeling is that they may not be able to. So this puts a big question mark over physical supply of gold. And if that physical supply of gold can't be done, of course, the price could shoot up.
But DRD Gold isn't sitting with a problem in terms of producing, is it? Well,
you go out there, I think it's a wonderful story when you go out to Brakpan and you see how they turn waste that's been thrown out. The mining industry, and we're sitting here with Joburg in the background, it was built on gold, but it couldn't process all that gold. It couldn't recover all that gold because of the way we mine, etc. So what it used to do is just dump it. It'll dump it on as sand on a dump, or as tailings on a dump. That's waste. What DRD Gold is doing, it's going out there and it's getting that gold back. It's recovering that gold from the waste. It doesn't have to go underground, it's on surface, which is a big plus from a cost point of view. The technology that they've got there is now moving smoothly. They're getting this gold back, looking at 150,000 ounces. So they're in a sweet spot. They are able to produce this gold relatively cheaply, and in an environment where the local currency is weak. But they sell it in dollars. So they're selling it in hard currency. They cost you in soft currency. The upshot is that, their share price has risen, I think, from October to when it was about 700 million. It peaked recently at about 4.9 billion. So that's a heck of a jump in a short period of time. So as they're saying, what a year. One moment you're down, the next moment you're up. And with the world having so much turmoil at the moment, gold is in a sweet spot. And with DRD Gold particularly, they have a quick response to gold price recovery. Now the gold price has been recovering in dollars, but when you actually convert it to rands, it shoots to record levels. And that is giving those countries that operate in gold production, and this isn't gold mining, but it's gold production, they're putting them in a good spot. Whereas if you're operating, say, in West Africa, and your costs are in dollars and your sales is also in dollars, you're not in such a sweet spot. And you can see that they're not moving ahead with the same alacrity that some of our local mines are moving. We see them wiping out debt. You see this cash build-up coming through, and the chances are that could even get better as we move along because of this picture that's being sketched by Neil Pretorius of DRD Gold, that there could be a shortage of physical gold. We haven't had that for a long time.
And what are the company's plans going forward?
Well, you can see that this company is in an important position because it's specializing in recovering that gold from muck. There's money in muck. They can recover that. They're doing a fantastic environmental job because you're removing those mine dumps. Can you imagine if we have a drought again and this company isn't operating and people aren't interested in these dumps and the dust starts swirling around? You don't want that. So they go in, they vegetate, they've got the funds to really environmentally protect the area. At the same time, as they remove these dumps, you release land. Okay, not all that land is their land, but still, it releases it from a national point of view, for a regional point of view, for development. And you can see some industrial development there. It's in big demand, this land, because it's around in urban areas. This is where the mining used to take place. And it just shows you that mining has a sustainable tailwind, because we're sitting here in Joburg because of those mines. We're still feeling that benefit, even though it happened 120 years ago. And this is the final stage of mining in this area. They're still getting gold out of it. And we're not talking about the uranium that they could recover from that as well. Their constraint was, once you take that gold out, you've still got a material. You've still got a residue, a sand or a material that, what are you going to do with it? You have to dump it on another site. And that was the constraint. But they've sorted out that constraint because they've got the license, they've got the go-ahead now for the new Withok deposition site. So it's a nice horizon that they have in front of them that they can look to continually trying to up their game, because they believe they can recover more of that gold through technology. And at the same time, because they've got their technology, others who don't specialize in this, there are companies with still underground, deep, dark and dangerous activities. They haven't had the same experience in actually recovering gold from dumps, and we know there's some big activities going to happen on the West Rand. If they move together with what is being done by DRD Gold, there could be a very positive outcome for that company, which is the oldest company apparently on the Johannesburg Stock Exchange. So it's gone through all the phases of gold mining. And it's now in this final phase in an urban area, which surely must put it in a good position, because people are going to want to recover gold in this way. They have managed to tweak their plant. They still believe that they can do more. So there will be less and less on those deposition sites, like at Withok. You'll be that material that's left behind, there will be less and less valuable because you'll be getting everything out of it. But of course, there's the uranium aspect. If the uranium price has to go up, they'll take that out of there as well. Sulfuric acid that you can get out of there, other metals and minerals, but at the moment their big focus is on gold. And the world is looking to gold at the moment to preserve them from huge losses owing to conflagrations around the world, governments and voters taking decisions to leave Europe and Britain. A lot of topsy-turvy activity is making people look again to gold. Gold coins, gold investment bars, physical gold. exchange-traded funds. We saw there was a record level of purchases of exchange-traded funds, gold exchange-traded funds, where you do own physical gold. Someone else holds it for you in a big system that they work, but you've still got access to that physical gold. The next step, of course, will be in the equity front, when people suddenly decide, wow, these gold mines are now getting into a sweet spot. Because if there's a shortage of gold, well, let's get our investment back in there. So it looks like there's a return of momentum for everyone involved in gold, including the gold mines that have had a tough time for a few years now. And the belief that governments are a little bit reckless with the way they keep the value of this money that is now paper money and it doesn't give as much confidence as gold has throughout history. When there's trouble, people grab onto gold, and it's happening again.
Thanks, Martin.
It's a great pleasure, Tracy.
That's it for today. Join us again next week for more news analysis on the South African mining industry.